Volume is the second most important tool on your tool belt. It's only second to price. Whenever you start your platform up, any platform you have, and you open up a chart, what does it show you? It immediately shows you price. And then it shows you also volume. Those are the two most important indicators you need to trade, period. I don't care who you are, it is the most important thing you have. The other indicators people add, right? You got to go select, add indicator, right? But you don't have to add really price, and you don't have to add volume, which is why price is number one, volume is number two. So you need to understand volume and why it's so important. Let me explain real quick. Volume is used as a confirmation. How and what do I mean? I mean, hit that like button, subscribe, and hit the bell so you're notified for more videos like this. But what I mean by volume is the fact that when you, let's just say a breakout chart, right? I know everyone uses breakouts. It's because it's easy to understand. Everyone who's a newbie understands what a breakout is. So when you buy a breakout, you don't want to just sit there and wait for volume to come in, because then you'll miss the trade. How many times have you been like, oh, I thought volume is important and I should wait for volume to come in? Because I used to be that way. And then you wait for it, but then now you got to buy 10 cents above your original price, right? That's frustrating. Then you got to wait for the downturn. And then when you buy it there, sometimes you're great because you bought it on the dip and it goes higher. However, sometimes it never dips. So what do I mean by confirmation? Instead, price is king. Price is always king. If you're waiting for a key area and the chart is lining up correctly, what does that mean? Make sure to go watch other videos about support and resistance, the idea of how I look for trade setups. Go watch all those, because you can't just take one thing in trading and then apply it right away and be like, I'm going to be rich. Come on. It's not easy. It's hard. It takes a long time. But you put everything together and you start to get better at it, you can become successful. So volume, what you want to do is look at price. When it breaks a key area, you do want to buy. Maybe not buy all the way, right away. But if you buy and then you don't get confirmation, right? Because volume comes after. If a lot of people are buying with you and you don't see the volume confirming that you need to get in this and stay in it, then you might want to be cautious. I know you're in the play because you're like, Alex, you just told me to freaking buy it, right? You're in the play. It doesn't mean you gotta get out. It just means be wary about it. You know, wait and watch it a little more. Maybe not add right away. Maybe when it pulls back, just sit there and just be patient. But if you buy it and then maybe a second or two later after it's already broken and it goes above a key area, let's say $1, and volume is massive, then that's just confirmation that you're on the right track. Now it's same thing on the reverse. If volume is massive as soon as it breaks, but massive down, you better get the hell out of that thing like right away. Because if you don't, that's just a sign that it's the opposite, right? It's a fake breakout. It's going to go down against you. But I want you to know this: when you buy something and volume gives you confirmation, you can have more confidence and buy on dips, especially if the dip, when it dips, volume is less than what it was when it broke. What does that mean? When volume is massive and it broke that $1 area, it means there's tons of people buying it. Makes sense? Duh. But then when it comes back down and volume is less, I know people used to think, or at least I did. I keep saying you guys, but I used to think that when it's less volume, it means not as much interest, right? It means it's not going to work, because remember, volume is a sign that everyone wants it, right? But think about it like this: when volume is less, when it's coming back down to that key area, what that really means, just think about it. It means there's less people interested in selling it because there's not a lot of selling pressure. And instead, when it gets back to those key areas, it may break under just a little bit. But then when volume comes back, and the volume comes back strong when it comes back to the upside, that means what? There's more people interested in buying it. But when it comes back down, it's little volume, less people are selling it. Does this make sense? I hope it does. Next time you're in a chart, watch that. Volume is confirmation. Think of it like that, okay? Price is king, volume is second. That's very important to understand, because the more you understand that, the better you're going to understand how to use volume to your benefit rather than always being late to buy something.